Namaste, welcome to Arthaniti. Today, let us discuss about international investing. Now, more and more Indians are getting attracted to investing in various geographies across the world. They want to invest in companies which have the potential of disrupting the way things currently are. Companies in the field of artificial intelligence, green energy, scientific research, technological advancement, so on and so forth are the ones people want to put their money in. Now, there are many ways in which Indians can invest in international markets. The first and the foremost is the LRS scheme allowed by the Reserve Bank of India. Now, the liberalized remittances scheme, which the Reserve Bank of India allows, is basically an individual can transfer up to $250,000 per year to a foreign country. Now, this money can be used to fund your travel expenses, uh, the education of your children, to invest in property, stocks, so on and so forth. People can transfer a huge sum of money by combining the LRS limit for members in a family and take advantage of this scheme. Correct? One of the other way of investing money in international markets is through investing in international funds. Now, since more and more people were started investing in international markets, mutual funds in India partnered with foreign mutual funds. They basically floated feeder funds in India, which invested in mutual funds already in existence, say in a foreign country. Now what like the advantage of this basically was people could take advantage of stock exchanges and their performance in foreign countries and get better returns by investing through these international funds. Now, to be more specific, if you take the example of the US stock market, it has outperformed its Indian counterpart in 4 out of the 5 previous years. Correct. So, like taking advantage of the performance of the US stock market by investing in an international fund obviously was a way to get better returns on one's portfolio. But SEBI, in its notification, had asked mutual fund houses to stop accepting fresh inflows in their international funds. A limit of $7 billion for the mutual fund industry, which was set by SEBI, was fast approaching. And because of that, SEBI gave the guidelines to stop any further investments in mutual funds. There was an additional limit of $1 billion, which was set for exchange traded funds. However, in June 2022, SEBI, with another notification, came allowed mutual fund houses to start accepting fresh investments for any headroom that was available for the in their particular schemes, international funds. Correct. Motilal Oswal Mutual Fund, which has 5 international mutual funds, is going to start accepting fresh investments from January 2023 in all their 5 international schemes. So if you have a SIP, STP, which is running in, which was paused because of the SEBI notification, will restart from January 2023. Make sure the account through which your SIP is funded is has sufficient funds for the SIP to go through, since the SIP will reopen in January 2023. Correct. The third way of investing in international markets is through the NSE IFSC, basically a stock exchange which was opened in Gift City in Gujarat. Now, through registered brokers, through this stock exchange, what you can do is you can invest in equities and ETFs of foreign countries. Correct. Basically, these are unsponsored depository receipts floated by the NSE IFSC. So, if you hold a specific number of DRs, depository receipts, you hold one share of a foreign company. Correct. But these DRs are traded only on this particular stock exchanges and are denominated in US dollars. Correct. You have to trade for through these DRs only through the registered brokers. and the settlement takes transaction plus 3 days. So this is one of the way you can invest directly in equities of foreign companies. The fourth way is some DIY solutions offered by domestic brokers by tie-ups with international brokers. But like investing through NSE IFSC, the homework has to be done by you specifically, because see, there are so many situations, political uncertainties, geographical uncertainties that you might not be aware of, but when you invest, say, through NSE IFSC or through brokers who have tie-ups with foreign brokers, you have to do your homework entirely. The safest way of putting your money in international markets is through international funds. But there, SEBI had put a pause on those investments, but they are slowly restarting it. The limit of 7 billion has not been extended, but say redemptions and stock market crashes in foreign countries have left headroom where new investments can be accepted, and that is what is being done. Funds which already had international funds in their portfolio of funds have started accepting fresh investments till the headroom is covered. So take advantage of that situation and invest in such international funds if you want to diversify your portfolio in international markets. If you have any queries, please feel free to comment below the video and I will be happy to help you. See you tomorrow. Goodbye.